Good morning, ladies and gentlemen, and thank you again for joining us this morning. And Christian, thanks again for agreeing to come and share from your well of wisdom. Like Selby just said now, how we can keep on growing, because that's what we're here for. We're here for growth. The moment we stop growing, then we basically die. There's no other way. But most importantly, in the property business, we must continuously acquire the knowledge, continuously learn from the different industry experts, because property is not a one-man's show. You can't succeed in properties if you want to do things alone. For instance, just on the topic, on today's topic, if you were to say that you will acquire finances by yourself, and it's actually something that I've tried. It's very difficult to do it. Just submitting and completing those application forms to the banks is very difficult. So, ladies and gentlemen, we definitely looking forward to the sessions. Today's session is one of the very important sessions. All the sessions that we hold here at Ekasi Properties, they critical for investors' growth, but this one about money, any session about money is very important, and this one is going to give us basics in terms of how we should actually structure our affairs, how we should behave ourselves as investors, how we should approach financiers so that we can make sure that we increases our chances of finance. I'm not going to be speaking too much. I will just let Christian start the session and basically do a brief introduction about himself and his business. And I want you guys to hear this from the horse's mouth. I know that Christian is a property investor by himself, and these are the people that I really like having for the sessions. Because if you get someone who's just in bond originating business, and he's not doing it for himself, it's different. That person is different from a person who's actually an investor, who's got a hands-on and a personal experience about what it takes for one to acquire the finance. And this is why we have people like Christian to then come and show us and share with us personal hand information, not just theoretically, not from a third person perspective, but from his personal perspective, to come and share with us how we can succeed in this business. So Christian, again, thanks a lot, brother, for sacrificing your 1 hour or 2 hours with us at this morning and just to share with us your knowledge. Thank you.
No, I'm happy to do that, and thanks so much for having me today, Numiso. The joke of it all is being in origination myself and also being an investor trying to find financing for deals, I at a point was hoping that I would start getting some preferential treatment from the banks because I bring so much business in. Yeah. But it's still exactly the same relationship. Yeah. When the bank manager says, "Please sit down, Mr. Janssen," my typical response is, "I'm perfectly comfortable on my knees, thank you." So it's part of the game. But in the end, I hope that I can impart some knowledge and guide people in terms of how to approach their financing applications, because in the end, it all comes down to how you put it together and what you can do to improve your chances. And 99% of my work is in the preparation side of things. So I'm going to delve into just a couple of frequently asked questions about origination, how it works. But it's a very brief slideshow. I welcome proper interaction, proper questions. I'm not a lecturer by profession, so I'm just going to quickly run through all of the slides, and then I'd like to open up the floor for questions, because that's the best way for people to learn. I mean, my experience differs from yours or from Nzuzo, who does larger scale types of projects, and all of that has the prospects of creating different types of questions, and those questions allow greater learning opportunities for each and every one of us. So I really welcome questions to it. So but also, as I carry on, please feel free to pop questions in the chat box, and then I will go through all of them as I conclude the presentation. So let me just get my screen sharing going. Okay, and come on, there we go. Right, so everybody can see that, right?
Yes, we can.
Just to briefly introduce myself, my name is Christian Janssen, and I'm franchisee of at360 Finance Mainland. Now, from my side, I'm focused on trying to find money. We as at360 Finance look at all different types of financing, so it's not just residential. We do look at commercial and all kinds of almost venture-based types of financing, but that's more on a one-to-one consultation basis because everybody's circumstances as and when they need financing will differ, especially with the more specialist products. So for today, I'm focusing on the core. All of us are residential property investors, and that is where the basics of origination comes in. And we'll all start off with a couple of small deals, and then gradually, as those small deals get a little bit bigger, or you've got the right base, then you start playing with the big boys and you start going into the commercial side. So there's quite a nice progression that comes into it, but all of it starts out with that first point of financing. So from my side, obviously I need to sell my services to you. So an originator is there to make your life easier. And one of the biggest advantages that it comes down to is that I provide one contact point for all of your feedback. I go out and I go and negotiate with each of the banks on your behalf. So you complete one set of documentation, and with that, I can run to each and every financing institution that will consider extending any type of financing to you. So then from there also, especially on residential, our services are priceless. If I don't get you a bond, I don't get paid. When the bond registers, the banks pay us a fee. So yes, there's an indirect cost, but the banks make up for that in lieu of us basically replacing a lot of their processing charges as well as their marketing, because they don't need to actively go out and market for origination business. We bring the deals to them. And with that also, through my years, I've built great relationships with key people in the banks. We submit directly to exactly the same credit department as your banker would. And through my relationships, I'm able to have proper in-depth discussions, especially when a transaction has a couple of interesting nuances. I can address that up front and then also have that proper conversation with the credit manager to say, well, listen, this is why I believe in this deal. And that's also where my reputation comes in, because I want to ensure that quality deals get submitted. And that in turn also means that they can expect a certain level of transaction that comes from my table. I've got an interesting name that I'm busy building with that on account of the fact that most of my applications are on entities, but also with that, we've got a wonderful conversion rate. I'm at about 89% of all transactions that get submitted that get approved at the loan amount that the clients were expecting. So it's something to be quite proud of, and I am. So my advice also is where presentations like these come in. I love putting a deal together. It's so much fun to get somebody into that position where they can purchase. And that journey is one of the biggest points of fulfillment for me. I mean, obviously, I want to see you be successful in deals because I've got that nasty habit of not wanting to starve to death. But similarly, so it's about getting you to a point where you can carry on purchasing. So you don't just buy one property and you're stuck. And then obviously part of the sales spiel of origination, if one bank were to decline, we may be able to get an approval from another bank. So having more options on the table makes it a lot easier for you. And then if we were to get approvals from all of the banks, we're able to keep your bank or you bank personally accountable to you to make sure that they give the best possible interest rate. Or failing that, you've got the opportunity to then engage with another bank to make sure that you get the best possible deal. I mean, prior to the massive interest rate drop, to give you an indication of how interest rate savings can help, on a 1.5 million rand bond, when prime was still 10%, if you just got a 0.5% discount from prime, you would save about 120,000 rand in interest over the duration of that bond. So it's quite a material amount, and it's something to shop around for. So that's literally why originators are there. So to take you through what the whole process of a property transaction entails, and also where I come in, I always stress on having to have a pre-qualification in place. And that is not just for my benefit, but for yours as well. If we know what type of bond you can expect, then firstly, you know in what price range to go and dig around for properties. There's no point in qualifying for, say, a 1.5 million and trying to buy 2 million properties, because you're going to have to put down R500,000 deposit. So that's the first step, finding out what the affordability is. Then the second step of that is also to identify any potential pitfalls. So if there's a niggle in your credit profile, we can sort that out up front. So you're not wasting anybody's time. You're not wasting a prospective seller's time. You're not wasting an agent's time. And that's also very important, because those relationships are key to expanding on your portfolio. You are, I mean, a lot of us, myself included, don't always like estate agents, but they are a necessary evil. The problem is just 99% of them make the rest look bad. So it's about finding those good ones. But when you get to the point where you've got that right relationship, where they know when you sign an OTP, you're going to get a bond and you're going to keep on getting bonds, you can start getting greater quality transactions. And I've got a lot of investors who have built relationships like that, where they get access to properties even before the agent lists them. So both benefits. The agent doesn't have to spend any money on marketing. He'll get his commission. And you as an investor get first choice. You've got that opportunity to get that proper bargain before it gets flooded and muddied water starts splashing on it due to too many potential suitors who would want to look at that property. And that can cause your price wars. So once you've got your pre-qualification in place, you'll be signing your offer to purchase. Once the seller has signed the offer to purchase, and also in conjunction with that, I'll help you with the completion of the rest of your application forms so that we can prepare the application. We'll collate all of the supporting documents, because this will differ. If you're full-time employed, it's a very small list of documentation. I mean, it's just payslips and bank statements with the other basics. If you're self-employed, it's 2 years financial statements, income letter, business bank statements, personal bank statements. It can become quite a cumbersome shopping list to work through, but that's also part of the pre-qualification process for me to prepare you, to make sure that you've got all of that handy so that you don't waste valuable time on that offer to purchase. I mean, if you've got 3 weeks to get a bond and you still need to compile your financial statements, you may find yourself losing out on a deal. So once the supporting documentation has been collated, then we submit to the banks that will consider your application. And that's the hardest part of this entire process, just to get that application to the submission point. The moment it's submitted, that's in the bank's hands then. So a couple of questions here and there, they may come back with a couple of queries, they'll come back with a lower offer, a decline, or an approval. With the right preparation, you will find that you'll get your approval in principle. Once the approval has been done, they'll go out and do a valuation. And once you've then accepted their final approval, they'll instruct it to the attorneys, and the transfer and registration of that property will take place. So it's quite a long list of events that take place. But the beauty of it all is, if you look at this list, your real involvement is the pre-qualification, signing your offer to purchase, getting the forms and everything in there. The rest happens in the background up to the point of you having to meet up with the attorneys to get the ball rolling, to get that property transferred into either your name or into your entity's name. And I always have a lot of fun with chatting about what you can expect from the banks, and they are lending money. A lot of people ask a lot of questions about that. They're concerned about whether there are still opportunities to get bank finance. And yes, there is. On the bigger picture, though, I always liken it to, and this weather is probably perfect for it. I mean, when I went out cycling this morning, it was a perfectly clear sky, one little cloud. So in my view, there's a 50% chance of rain. Either it will or it won't. So now the question you need to ask yourself is, how many 50-50 chances can you put down to get that one deal through? If we've got 4 50-50 chances by means of submitting to 4 banks, there's a much better odds of getting that transaction concluded. So a big question also that gets asked quite a lot is how a building loan differs from a new home purchase. And one of the big things that we find there is that people don't always have the right costing as part of their preparation. Nomiso, I'm hearing a bit of feedback here. I think somebody is maybe unmuted and shuffling around a bit. Sorry, okay. Selby, sorry, I muted you there. Now, when you look at your building loan application, there's 2 elements to the transaction. The one comes down to the purchase of the stand. If you purchase it with a building quotation and all of that in place, you can very well get 100% bond, where a vacant stand will have you limited to 60%. So it's quite a nice little influx. But one of the key things you need to look at there is that your building costs are realistic. I mean, if we maneuver around and we get the right builders, we can very, very easily get to a point where we can build for much cheaper than what the outside market will allow. But the banks won't look at it from that side. So if they look at a rate per square meter in a certain area of, say, 9,000 Rand, and you come in at 6,000, they're going to discount the building package because they're going to take it down to what, or they're going to put the contract amount up. Because if it's a 200 square meter house, for example, you might be building it for 6,000 a square, so that's 1.2 million. The banks will say their indicative market will put it on a 1.8 million if it's 9,000 a square. And accordingly, they will then look at a couple of questions. So that's also a lot of footwork that needs to be done, but I'm happy to also guide on an individual basis with that. Because when the banks look at the valuation of that property, they will look at what that end product is going to look like, what is it going to be worth. And when you buy a half-built property, it's also a good example of a building loan, where you need to make sure that you're in the right end product value to make it work. Now, I've had some very interesting transactions with that. It's not the most fun deal, but that's also what makes it a worthwhile deal for you to look at, because it's very difficult for somebody to sell a half-built house. And that's an opportunity for us. Whenever somebody struggles, we can find a good deal. And then a very important question, and this is something that for us as investors is very, very crucial to create sustainability in our financing strategy, comes down to buying in entities rather than in personal name. When you buy in your personal name, that bond will reflect on your personal credit profile. So what that means is all of the banks will see it. If you get a bond at ABSA, for example, for 500,000 Rand, but you qualify for $1 million, then FNB, Standard Bank, and Nedbank, and ABSA for that matter, will only offer you another 500,000 Rand to take you to that ceiling of $1 million. When you buy in an entity structure, you're just signing personal surety. That bond is in the entity's name. So that technically means you can get $1 million at ABSA, FNB, Standard Bank, and Nedbank. So it takes you to 120% of your gross income on bond qualification terms. But similarly, so it gives you an opportunity to greatly scale your way forward in terms of investment. It does have a couple of potential setbacks and pitfalls. So it's not something to just dive in and just buy and get to your ceiling, because you will fall stuck later on. But as that entity starts building its own track record, where you start getting rental income and things come and create a profile for your entity, your personal suretyship will still be there, but the income from the company will be offset against that as well. So you're able to push a little bit higher. I've got a good example there with one of my investors. He qualifies for 3.1 million. His total bond exposure that we're standing on now is 11.8 million, of which the most is at one bank. So technically, if all of that were in his personal name, he would have been out of the market a long time ago. So there's a bit of patience involved, firstly, but secondly, it's also important to look at how you can build to that end goal that you're going to work towards in terms of your income. And one thing, just when you purchase an entities, is the banks may levy a deposit. It's a couple more supporting documents in terms of accountants' letters, company registration that's required, and the applications take a little bit longer. A personal name transaction can be as quick as same day or up to 2 days even for a final grant, where an entity application, and when you buy an entity, I would suggest that you give yourself about 2 weeks to get bond approval, because that way we know we've got enough time. We're not going to be in too much of a rush to get that transaction concluded. So ideal on that OTP is put it down as 21 working days to get financing. That basically gives you a month, because I've got a couple of applications that are slight headaches. I mean, currently I'm sitting with one that we submitted on the 2nd of November. It hasn't been approved yet. It will get approved, but it's been a bit of a long slog. But it also comes down to the nature of the background behind it. So I'm not going to delve into those details because, quite frankly, it bores me. So I don't even know how you'll feel about going through the details of what happened there. And then when you plan your own purchases, the big thing comes down to looking at your bond qualification. There, the banks have a soft rule of 30% of gross income as your maximum bond installment. In other words, if you look at your payslip before deductions, if you earn 30,000 Rand a month, your maximum installment will be 30% of that. So that means 9,000, which we can then convert back to what the loan amount will show. At this point in time, I think it's probably about 1.2 million at the current interest rate. And that's also something to bear in mind, because that will drop down to about 1,050,000 when prime is back to 10%, and it will go back. So make your preparations to make sure that you can also absorb interest rate hikes. They are going to come. It's going to create opportunities for us, because a lot of people don't budget on it. They're just seeing it's cheaper to rent or to buy now than to rent. So they're just going out and buying and buying and buying. And at some point in time, when that turns around, a lot of crying will happen. And that means it's opportunities for us to buy. I mean, just on that note, if you look at the interest rate hike, a 30% increase in your installment is basically what you can expect from prime of 7% to prime of 10%. So that's material. It's quite a lot. 7,750 Rand for R1,000,000 at prime of 7% versus 9,650 Rand a month at prime of 10. That's a big gap. So when the banks look at your qualification, first it's your gross income, then it comes down to your disposable income. So after all of your obligations are met, you have to have enough money left to cover that bond installment. They also do a little bit of a stress test. So under 650,000 Rand purchase price, they'll look at the bond installment at prime plus 4% and just make sure there's leeway due to the nature of that market being a little bit more exposed to inflation. Over 650,000, they look at a stress test of 2% above the offered rate. And very important with this, and this is also where the disposable income comes in, your credit profile. What does it show? Do you have a good enough score? And I'll also post it in the chat box once we're done with this, just the link to go and get yourselves registered on clearscore.com. Get a monthly report, make sure that you're conducting your credit well, because that's how the banks are going to base their decision on you. If you've got a bad credit score, it may mean that you get declined outright, or they're going to load it on the interest rates offering because you are deemed a higher risk. They look at the history that you have to project what you're going to do in future. And then as things happen in the market, be it appetite in an area or be it just general economic risk, the banks may levy a deposit. So it's not always a given that you're going to get 100% bond. So prepare for that. If you've got that cash on hand, it's easy to then just park it in your access facility if you get 100% bond, and that then becomes your working capital to move on later on. Then this for me is where everything comes in terms of my value add. The worst mistake that I've found investors make when they go to their own bank is they disclose everything on that income and expenses form. I mean, yes, we love going out for a nice dinner, couple of drinks with the friends. Some people enjoy going to the casino. And those are expenses that will be visible on your bank statement, but it's not contractual. So your contractual expenses are physical credit agreements. So on your credit profile, you'll see short-term insurance, vehicle finance, credit card. Those installments are contractual obligations and they have to be disclosed. The banks can in any case see it. The other expenses, our happy days, entertainment, all of the stuff we go out and do are discretionary. So if you keep that off of your application form, the banks won't take it into consideration. But if you disclose that you spend 2,000 Rand every Saturday at the casino, then they have to take that into consideration as an expense, which means you lose out on 8 grand disposable cash flow. And I'd like to give you the benefit of the doubt, as I would myself, that I'll just go once less per month to rather pay a bond. So take it from that approach and just make sure that you look at how realistic your monthly budget is. And that's also where one can spend quite an amount of interesting time on looking at what you're spending money on, what's essential, what's nice to haves, and what is absolute just blowing money because you can. And then start prioritizing accordingly to make sure that your budget works towards creating long-term wealth for you. Because this is why we're here. We want to build a portfolio that will create long-term wealth. So go and eat out twice less per month in lieu of just paying a shortfall on a bond. Long-term, that property will start paying for you to go and eat out 3 times a month as opposed to the 2 that you had to sacrifice now. And then the overreaching when buying is also very important. Don't stretch. Make sure that you can rather buy within your range and keep on buying. If you qualify for $1 million, look at properties of 800,000. It gives you some wiggle room to refinance them later on. And it also looks like a much lower risk type of application when you look at it from the bank's perspective. The property types is also something that people can fall stuck in, where you'll find that somebody may be looking at a multi-let, so the property has 10 back rooms, main house. The banks won't finance that as a general rule. So you have to also look at exactly what it is you're purchasing and whether the banks are willing to fund it. And on a residential mortgage bond, it's as simple as just looking at it as, can one family stay in this house? And can we present to the bank that no matter what's going on that property right now, it's going to be very easy to just reconstitute it into a single house. I've had a case where a client had a property that was converted into 3 units, and Standard Bank came back and they said, we're happy to give you a bond. His purchase price was 1.2 million, but they looked at what it will cost to reconstitute it into a normal residential property. They estimated that on valuation at about 185,000 Rand, and they lowered the loan offering with that, where they said they're not taking that risk. And it can make or break a deal. So it's very important to look at what type of property you are investing in to make sure that everything is sustainable in terms of what you're buying and how you're financing it, because that is really crucial. And then further on, the structure of your portfolio. I mean, I touched on having an entity structure. Ndumiso definitely has a couple of good connections for you of people to chat to get the right structure in place that fits into your tax and estate planning. I mean, we're here to build a legacy. And part and parcel of that legacy is the less things you have in your own personal estate, the better for the people you pass all of those assets on to. I mean, the most expensive thing each and any one of us can do and will do is to die. You literally wipe out 30% of your whole estate value. So that's quite a significant amount. And then the financing strategy is something that on a one-to-one basis, I spend quite a lot of time on. You need to look at how you keep on purchasing. What bank am I going to? Why am I skipping out on this bank because I've already got a bond there? Why am I approaching another bank with whom I've got no relationship? And that's part and parcel of what I do from my side. And as I mentioned, self-employed applicants, a little bit more of a challenge, because it's not just what you show in your own account. It's where that money comes from. And with you being the jockey, you have to show how you are conducting that business. And the banks look at it in two ways. So they look at the business on the one side. How's the business performing? So 2 years financial statements, you have to show at least 2 years track record, otherwise they won't consider you. And the business must be profitable. Then separate to that, what salary are you drawing in your own name? So it's all fine and well to have a wonderful cash flowing business, and I'm drawing $5,000 a month because I don't want to pay tax. The banks are not going to give me a loan because my personal earnings is too low. So that's part of our planning that we'll go into with a pre-qualification. If you're self-employed, just say, well, up your salary, draw it for 2-3 months. With your income letter, we can then correlate and prove it to the banks. You've got the higher qualification. Once the bond's approved, drop it again. I literally just did that now. I had a bond that registered a week and a half ago. Same process, just getting a better pay slip, higher income, pay that pay as you earn. I mean, we have to pay what's due. It's unfortunately an operational cost out of this perspective. And now I'm back on playing with my loan account, not paying the tax. So you offset it and you just maneuver it, because tax compliance is something that is also quite important. The banks will, in many an instance, ask for your last 2 years tax returns. They want to see what you're disclosing to SARS. It's not that they're enforcing on it, but they need to also report back to all kinds of governing bodies to ensure that they are not acting recklessly. They're not condoning money laundering and all kinds of things. I mean, one of the big things that we found, all of our application forms have been amended to also ask the question, are you directly related to somebody who's politically exposed? And they will ask a lot of questions if you are. If a politically exposed person is a party to a transaction, it also makes things a little bit more interesting, I'd say. So it's quite important to also just look at all of that and make sure that you plan and put your entire transaction together correctly. So your chances in terms of improving, I'm almost done with my slides and we can get into the questions, is first and foremost to make sure that you've got a clear credit record. If you've got a good credit score, the banks are going to like you. They are going to base their offering on two things. One, you as applicant, do you have consistent earnings? Do you have sufficient disposable cash flow? Do you have a good credit score? And then they're going to look at the property. Is the property good enough security? And they will always give a loan based on the lowest of purchase price or valuation. So if you pick up a R1 million property for 700,000 Rand and the banks are willing to give a 90% bond, you're going to get a 630,000 Rand bond, not based on the million. But if you can buy that R1 million property cash for 700, and then after transfer, finance it, there's no purchase price, so they'll base it on the valuation. And with that, a 90% bond would be 900,000. So there's a top tip to also look at when you start playing with distressed properties. And then at all points in time, also, best way to improve your chances of getting a bond is to buy in your qualification range, because that's ultimately one of the biggest limiting factors to a transaction. And then this is my call to action to you in my final slide. Where to start? Reach out to me. Let's do a pre-qualification and let's get all of the cards out on the table. And here I'm also going to say I keep the utmost of confidentiality in place there. I need to know everything, no matter how bad you feel about how you feel your finances are, or if there's problems, or gosh, there's a creditor that's really giving you hell. I need to know about that, because that's the only way that I can guide you and make sure that we can get you bond ready. You may not be bond ready today, but you may find yourself being bond ready in 2 months, 3 months. I've got a client who it took me a year to get him to get a bond, but we got it through. It's all about how you structure it, all about how you strategize it. And remember, consistent cash flow. The more stable you look, the better your chances. It's literally as simple as that. And when you think about it with the application to the banks, and that's why pre-qualification is important, look at it as going on a first date. First impressions last. So you need to make sure that the makeup is perfectly applied and everything. I do occasionally put lipstick on a pig to get a deal through, but I digress. It's part of the joys of the business. But let's get you prepared, because that's the only way that you're going to make sure that you are ready and you are able to get to where you want to be. Right, and that's me. Thank you so much, Ndumisa. And I'd like to open up the floor for questions now.
Thank you so much, Christian. I'm not sure where to place you, whether you are a priest, we must come for confessions, or whether you are a makeup artist, or whether you... I'm getting confused on where to place you. But one thing that I'm going to say as the ladies and gents are thinking about questions, and I will allow them to pose the first questions. I've got lots of questions on my side, but I will open it up for them to ask their questions. I want you to share with us your contact details, because I don't want anyone because from what I've heard today, everyone that's going to get this recording is going to ask me for your contact details. So let me just sort that out and ask you for your contact details.
Yeah, just posted it in the chat. So my number is 082-854-7074, and email address christian@360fin.com. Just remember the second at, the AT after the @ sign.
Okay, thank you, Christian. Ladies and gentlemen, do you have any questions, or are you still thinking about what Christian has said? Mr. Mtembu.
Hey, good morning, everyone.
Good morning, Mtembu, and thanks for joining us.
Yeah, hey, great to see you again, Zizo.
I missed last week, and you know, I said this week, no. Because I only have one. Even next week, I've got a presentation at the same time. So thank you so much, gentlemen, for this eye-opening and excellent presentation. Some things we may know, some you need to be reminded. I think in my case, just to give you a background, I had, in the past, I was using a lot of cash on my properties, and I think I've alluded to Christian about that. But now that I've entered the space of using bank finance, like this year, I've got like 3 properties that have been financed already. And one of the questions that perhaps now I'm starting to ask, like for the first one for me is the credit score. I understand that there are different scores that one gets. I mean, if you're paying your accounts and conducting your accounts in an excellent manner. However, but there's that, if I may call it, that elite position where you are regarded as the best or the excellent. You know, I do not know how one gets there, or what are there any special things that you do besides conducting your account in an excellent manner? I mean, all my accounts are clean. I don't have a problem in that manner, but there seems to be, if I'm not mistaken, I'm not familiar with the scores, but it looks like above 600 or something. So how does one get there? And then for me, the second question that is burning in my mind is, I'm listening to this term, my total bond exposure.
Yeah.
You spoke about if I'm applying in my personal name, and I've got an exposure of 1 million, for example. If I use my name, then I can get 1 bond, and then I'm stuck.
Yeah.
However, if I use different entities, do I then qualify to get 1 million from Standard Bank? I can still get another 1 million from FNB, another 1 million from Absa. Is that real?
Yes, that's real.
Oh, that is amazing. I can't believe this. It means I'm sitting on gold.
Yeah.
And then And then perhaps my last one is, you know, this is Ekasi Properties Educate. So most of us have properties in the township. I speak because I also have a property in the township, you know, that is in value. I would put it at 4 million at least. But or how it worked was I bought a vacant plot. You got the plans approved and then started building using cash. So there is no way, like in the deeds office, if you run that property, it will still say that it was bought for what, like 200,000. So it doesn't reflect, unlike a property that is purchased. If I had to sell it now for 4 million, then it's going to be easy to track that. So how does one able to you know, to leverage on such properties? Because I feel that I do have some funds that I can actually tap
You've got
into.
equity.
Yes, in terms of equity. Thank you.
So to start off with, I posted the link in the chat. Go and register on www.clearscore.com. You'll get a monthly credit report, and they go through quite a lot of effort in terms of how you'll see you're on track with this, you're doing that right. I think I'll actually, let me just open up mine. I think that might actually be quite a nice way to do that. So I just want to log in and then I'll share my screen. So when you look at what ClearScore shows you, so it'll show you your credit score, your whole history and everything. And it takes a lot of effort. And I've seen my score go up significantly now over the past year and a bit, just due to me clearing out cash. But what I want to specifically show here is when you look at the traceability of it. So your score on Experian, first and foremost, needs to be 621 and above. That's where you're really playing in a good range. But yeah, so here's exactly what I wanted to show on what helps with improving your score. If you don't have any court judgments, if you've got a judgment that's it's not the end of the world, and if some of you are in that position where there was bad debt or issues and whatnot, we'll find that when we do a credit inquiry, I'm happy to also guide you and assist with getting that sorted out. I've got a wonderful attorney who can help with that. Your number of credit inquiries is very important. So if you're actively searching for debt, it will start giving a hit on your credit score. So very important to limit the amount of times that you just go and check if you qualify for a personal loan or whatever. Don't be tempted to just see what offers are there. It actually has an impact on your credit score. No defaults in terms of bad payment or missed payments. The amount of accounts that you have will also gradually improve your score, because if you're not just constantly getting new ones, one of the worst things I've ever seen on a credit report for a client is that they are constantly doing those short-term cash loans. So when you draw the credit report, there's hundreds of these things showing, and it stays on that report for 24 months before it drops off. So that to the banks is a very, very high risk point. And also it is affected in your, reflected rather in your credit report, because you are seen to be struggling to get to cash, to get through the rest of the month. And you're throwing a hell of a lot of money away on interest and fees. And then one of the big ones in Zuzo is your credit utilization. If you're using less than 50% of your available credit, that makes quite a nice difference. So something stupid, if the banks were to offer you an increased credit card limit, take up a little bit of it, just don't use it. Like for me personally, I just switched all of that to be on budget. So my straight credit card limit is much lower, and I settle it at the end of every month. So I use it because you get good points with eBucks and all of that. And then with you conducting that credit and paying on time and being a low risk, your score will gradually improve. Then so that's basically question 1 and question 2 answered, I hope. Just let me know if I missed something. But on question 3 about your property, when you look at financing it, when you go to the banks, they are going to send out a valuer. So yes, you bought that stand for 200,000, you built a nice and big house on that stand. So now you've got equity. We will submit an application to the banks. We will say, well, here's the title deed of the property. It shows we paid 200,000 for it. We are applying for a loan of $1 million, for example. And the banks will then assess your affordability. And the second step, once they've approved in principle, they'll send out a valuer. Now, from a valuer's side, and that's one of the key things that you also need to look at, especially with properties that are in the township areas, they're going to look at what an average in the area works out to. So if you've got a 4 million rand property, but all the houses around you go for 800, 900,000, they're going to deem it a very high risk, because from the bank side, it sounds horrible to put it this way because they are my biggest source of business, but they're very negative. In the end, they have to report back to their shareholders, to the Reserve Bank, and they are also making use of other people's money. So they need to be very, very conservative. And the way that they do that is, firstly, they look at what happens when you default, not if you default. And for that, firstly, they look at what the property's value is. Can they sell that property to recoup their finances? And secondly, they have you sign an additional suretyship on your bond. All of you will see as you take out bonds, on the final approval, they refer to it as the additional amount. It's not that you're getting additional financing, but you'll find yourself signing suretyship for 120% of the loan amount, because that means that the bank has a preferential claim to all arrear interest and cost of repossessing that property when you inevitably default out of their views. So they're taking a lot of risk on you. So it's just very important to have a look at what the comparables around that property of yours show, because that's ultimately what's going to guide the banks in terms of what type of loan they will extend on it. And it's also a very important point to note when you look at your own property portfolio. Make sure that you focus on an ordinary home for an ordinary South African. You'll never go wrong. People need to live in a house, no matter which way you approach it. And that's also the absolute beauty of property for me. I mean, if you go to bed tonight and the market crashes, I'm not going to wake up tomorrow morning and my 2-bedroom flat is all of a sudden a 1-bed, but my share portfolio could halve in value. So it's a slower moving asset. It hasn't been the greatest performing asset over the past year and a half, but I mean, what has really done overly well? The beauty of it, however, is it'll just gradually keep on ticking and ticking with rental escalations, with capital growth. So we'll find our waves, our ebb and flow as it goes along. Winnie, you've got your hand up.
Christian?
Yes.
Before we take Winnie, I just want to find out, just building up on Zuzo's question on the credit score, how I know credit score is very important, but I want you to just say it again. How important is a credit score? And this question is also based on the fact that what happens if you have been conducting your finances very well, like myself. I've been using out, I just maxed my credit card now because I was building. So I use the money to generate income, actually, the money that I use on my credit card. So I'm just trying to balance the two, whether when the banks see your credit score, so you might find that on that part where you talked about how you utilized your credit, I've utilized my credit badly or very well. I don't know what is viewed as, but I use it to make money. I don't use it for consumption. I use it to generate income.
Yeah, so you're paying it back. That's the thing. So the key there is just to always pay it back. And especially something like a credit card, it will always be a little bit of a higher interest rate. So get it paid back as quickly as possible. And that's a very important note. Actually, you reminded me, I still wanted to mention that. When you look at your credit card, you are typical interest rates, I think mine is 15.25 or something %. So it's expensive. So some of the guys just starting out may find that the credit card is at an interest rate of 18 or 19%. So that's where I started off way back when. So speak to your bank, try to get them to push the interest rate down. It's a yes or no question, so, or answer to the question, so why not? But outside of that, if you look at your minimum payment, and let's work it on a 20% interest rate to just keep the calculations simple. Your minimum installment is 5% of your outstanding balance. So without interest, it's 20 months to pay back the capital. But then you add the interest element to it, and it really will start hurting. So try and pay somewhere between 1.5 to twice the amount that is payable on your credit card. Get it cleared out as quickly as possible, and you'll really save a lot on interest.
Yeah, I was very lucky. I don't know how it happens, and I take your advice and I'm putting it out there as well to say, guys, please check with your banks whether you can get a very low interest rate. I just went to the bank and then they asked me for the credit card. I said I don't want it because I had my Discovery credit card where I get charged 20, I think it's 19 point something %. But my bank, Standard Bank, said, do you want the credit card? I said, no, I don't want it. But then they said, you don't even want to know how much is the interest rate. And they said, it's prime plus 0.5. So I said,
nice.
no, I want it, bring it. So that's what I have. So I use it instead of going out to get, whenever I need quick money, I go there and I use it. So, yeah. Just go there and check whether you would qualify for a better interest rate.
Yeah, and keep on asking, harass them, irritate them.
Yes.
Like I do that with all of my bonds. Every year, I make contact with each and every bank. The only one that's very difficult is Standard Bank in terms of renegotiating interest rates. They tend to just say, you signed it at that rate, so too bad, so sad, that's your problem, live with it. And that's also why they've got the lowest retention of bond clients in the market. But with ABSA, FNB, and Nedbank, I try every single January where I say, a year has passed, you've seen, I've made my payments, everything is fine, the property has grown in value, my outstanding balance has gone down, do something about my interest rate. Even if they drop it by 0.05, it helps every little bit.
Yes. Winnie and Ashley, your hands are down now. Winnie?
Yeah. So I want to buy a property, but I want to use the extension of the current property that I'm staying in. I don't know what term is it? Is it equity? I'm not so sure.
Yeah.
So what do they look at? What will the bank look at to offer me that the bond?
So firstly, you'll be limited to just applying to the bank where the bond is, and I'll elaborate on that. So if the bond is approved at ABSA, for example, now say you bought the property for 700,000, it's now worth 1.2 million, and you want to now get access to that 500,000, they call it a further advance. So you'll go to ABSA and say, okay, guys, I want to do X, Y, and Z on my property, and with that, I would like to increase the loan to the property's value. ABSA will then look at your bond qualification. You need to have the affordability, and they'll look at the valuation of the property, and they'll give you the financing. It's a fairly quick process because there's no transfer of ownership. It's just the registration of a second bond. It's a nice and easy transaction. It's quite quick to get the cash out. The other option to consider, and that's also where we'll just look at what the offered interest rate is on that bond. I'm happy to also advise you on that. But with the next property purchase, why not look at getting a bond for that property on its own? You can ring fence and you can go to all of the different banks. So the reason why I'm saying you'll only go back to ABSA as an example there is for you to switch the bond to another bank, you're going to have bond cancellation fees of about 4,500 Rand, and then whatever interest rate they give. So a lot of people want to shop around and say, no, I'm going to move my bond from ABSA to FNB, for example. And let's say that you can save 0.5% in interest. Sounds great, but then you look at all of those costs that you need to take on. Bond cancellation, new bond registration, let's call it 25,000 Rand. What is that 0.5% over the duration of the first 2-3 years? You're not going to see a cash flow benefit. It's cash out of pocket. So it's important to also just look at it from that point of view.
So can I ask a second question? Do they look at the property that I want to purchase? Because, you know, when I was filling up forms, they didn't even want the address of the property that I want to purchase. They want to concentrate on the property that I want an extension on only.
Yes, that's correct. So on a further advance, it's tied to that property. And you can get consolidated structured loans where it's one facility with a bunch of properties. Not always the best type of product to work with, but it also depends on what your circumstances are. So that's one element to it. But with this specifically, you are asking for further advancing on that bond. So they don't care about the other property. Quite frankly, it doesn't matter to them. I'm quite fond of having a bond on each of my properties because it also gives me a lot of wiggle room. I'm not just limited to one bank, one facility, one thing.
Thank you.
Oh, you're welcome.
Christian, before we move on to Ashley, just this quick question, and it also goes back to what Nzuzo mentioned, and I don't think you touched on it. Do we need to have a bond per, is it a property per entity? That is, with structure work better? Must I put all my properties in one entity and then just use that entity to grow my portfolio? Or is it better to have a property per entity? So for every property that I'm buying, I register a different entity.
Oh, the accounting fees are going to kill you. So the ideal is to register one entity, gradually start buying properties in it, build it up, get it to a point where it's also sustaining itself, and then reassess. So you might find, and I've got a good example with one of my investors where most of his properties were offered by ABSA, and it's in one entity. We got to a point where it's not really sustaining itself yet. So there's a hell of a lot of reliance on his repayment ability. And the advice, and it's 7 or 8 properties, all bonded with ABSA. I told him, well, register a second company, and we went to FNB Standard Bank to try and get it. So we only really have access to ABSA, FNB, and Standard Bank on entity applications. And yeah, out of that, then it makes quite a nice difference because he's limited on exposure to the one bank, and now he's got options to go to the others.
Okay, thanks, Christian. Ashley.
Oh, thanks, Ndumis. Christian, thank you for the presentation. It was quite insightful and I needed all that information. My question is, what if let's say I want to buy a personal property for the family, and then I want to go into getting my portfolio to owning properties. So I wanted to know, once I buy the personal property, how long will it take me before I can start building my portfolio?
You can do it simultaneously, dependent on what your bond qualification is. So first and foremost, you need to look at how much you qualify for and what the end result is in terms of purchasing that property. Now, I've got a couple of examples of guys who decided to rather hold off on buying their own personal primary residence, and they started building portfolio. My one client that I'm busy with now actually got to a point of he's got 28 flats in Joburg CBD, all nicely set up entity. There's beautiful cash flow coming out of it. And now he's buying his primary residence. He was renting because it was much cheaper. And in his price class, I mean, he was paying 28,000 Rand a month rental for a property that's worth about 5.5 million. So it's much cheaper to rent than to own in that specific price band. And now where he's buying another property is also to accommodate other things. So he's in a much higher price range, busy buying, and I love it. It's much better bond application than the 200,000 Rand deals that he's been sending me. But it's a 6.8 million Rand transaction now. So it all depends on what your goals are, where you're working towards. Another client of mine, as an example, was a very interesting conversation with his wife when we started chatting about it, because he then decided that they were busy looking at buying the house that they were renting. They could buy it for 1.1 million, and this was back in 2012. And at that point, he then thought, but what if I take that extra 3,000 Rand a month that I'm going to have to put down to cost of ownership of this property, and I go and buy a couple of smaller properties? And I ran the numbers with him, I showed him, and he said, no, gosh, that actually makes a lot more sense. So he just went home and he told his wife that they're not buying this house, he's buying flats. So she phoned me at 10 o'clock at night after a massive fight. And then in the end, I played the numbers. And what they ended up doing was they bought 4 flats. All of them had a shortfall of about 600 Rand a month. The rental started climbing up, and they waited 4 years. And those properties subsidized about 4,000 Rand a month into the purchase of their house, which they bought for 1.3 million. So yes, a little bit more expensive, but they created an additional asset. Where if they went and they just bought that house, they wouldn't have had affordability to buy additional properties. So you need to look at it from that point of view. You need to understand where it is you want to go. And also remember, cost of ownership of your own primary residence is expensive. Point 1, there's emotion. You look at that kitchen and at a point you just, oh, I'm sick and tired of these cupboards. I'm going to replace that. Boom, 10,000 Rand. Little by little, you're going to find yourself spending money on things to make it homey and nice and what. But over and above that, your normal general maintenance. I mean, now you didn't pay enough attention and your gutters filled up with leaves and they started rusting. Now you need to replace all of your gutters, and that costs you 28,000 Rand. I can talk out of experience with the rental property. That's why I can throw the number there, because the tenants didn't clean the gutters. And valuable lesson for me, every 6 months I have the garden services just go and clear it out. And if there was bad weather afterwards, but unfortunately some of us have to pay the school fees when we learn things. So learn from my mistake there. But all of that comes down to additional costs of ownership over and above the fact that it is going to be a property that you are going to be spending a lot more money on to own. Where like that specific property of mine, I've got a tenant in there for 15,000 Rand a month. I can sell it for 1.8 million. So at a prime interest rate of 10%, 1.8 million will give you a bond installment of about 16,000. Rates and taxes is 1,300 Rand a month. Then your water and lights and everything come, I think in that property, their bill is about 3,700 a month. So that's 21,000 Rand a month that it would cost you to live in there, as opposed to 15,000 rental plus utilities, so 18. So there's a 3 grand gap, and they don't have to spend on maintenance. That's my problem.
Okay, thanks. Yeah, I think it's the wife that we first should consider. But okay, thanks for that. Yeah.
That's an important chat to have.
Yeah. Thanks, Christian. Thanks, Ashley. Yeah, I wish I was a fly on the wall when those discussions were being held. And I think we must get that guy to come here and teach us and mentor us in terms of how to have those discussions, how to be bold like that, to say we have already agreed to buy a house, and then you come back, you say, no, there's no house, we're buying flats.
It sounded like they were standing on divorce. We actually ended up, the wife and I had coffee the next day, because I had to explain this to her, because her husband was dead set, this is what I'm doing. And it's funny.
Yeah, and you also touch on something that's very important, and we tend to ignore, especially for us as property investors. We tend to just blindly go and say, no, we are going to, because we are property investors, we are going to buy the properties that we live in, instead of also considering renting those properties, because you can get a property that will be suitable for your lifestyle, whatever lifestyle that you want to live. for instance, your client, you want to be in a 28,000 rands a month lifestyle, and then he's renting that property. And if we were to buy that property, we'd probably be paying about 40 or 35,000 rands a month. So,
well, in his case, it's up to about 60,000. So it's rough.
Yeah, it is. It is. And he can get it for only 28,000 rands. Yeah. Okay, thanks, Christian. Let's move on to, I think the next is
sorry,
Velile.
just a quick one on that, Ndumi. I'm sure a lot of you have seen some of her Facebook posts, Maricia Robas from Gauteng Property Inspectors. Her father wrote a book, The Proud Homeowner, Albert van Wyk, I think. Gosh, can't remember his surname now, but go and look for the book, The Proud Homeowner. I'll quickly dig around, and if I can find the title, I'm just going to WhatsApp it through to you, Ndumiso, so you can share it on the group as well.
Okay, thanks, Christian. Looking forward to that one. Let's go on to Velile.
Yebo, yes, Ndumiso.
Yes, Pudi.
Yebo, yes. Okay, thank you. I think the question will go to Christian. Luckily, I have 2 deals that I'm dealing with Christian now, and we've got positive feedback. You know, once you get approved by the bank, you feel like you need to go back and hunt again. So, yeah, we just got approved 2 days ago, so I've already started looking for other properties. But then, Christian, one thing that you've also mentioned earlier on, which it was not quite clear for me, in terms of credit score, it's going to be 2 parts of this one. Credit score, in this case, I've quickly checked, I'm sitting at 687 credit score. And the properties that I just bought, it was under a company, not my name, because I'm just the one who's applying for the finance. What do you call, what is this? Your
affordability and surety.
For a surety, yes. So now, because I've already had these properties, and then you'll be under a company. Now, if I have to apply again for other properties, does that going to affect on my credit score already, or will it appear on my credit score? Or when I go back and apply, they will not see that I've just got 2 properties?
It's only the bank where you accepted that bond that will see that bond exposure. So that makes quite a nice difference there, where it's just your suretyship that's visible internally to the bank. In some instances, the banks will do a credit score on the company itself. But once again, I mean, your transactions were literally just approved and instructed. So on the bigger picture, nothing is visible. Even if they do inquiries on the company, it's still a dormant, non-trading entity. So while you buy additional properties now, there's absolutely no issue.
Oh, okay. Then that's fine.
Christian, you have to repeat that. Actually, I wanted to ask you this question. In terms of what happens if you buy 2 or 3 properties at the same time, you apply to different banks at the same time, what happens there? But I think I want you to first repeat the answer that you've given to Velile, because we need to take advantage of that if there's such a gap that we can spot.
Yeah, so it's literally a case of when you purchase in an entity, the bank that approves that bond will require your suretyship, especially if it's a brand new registered company. You sign surety for it, so it's based on your bond qualification. Then the second step to that is, once it's registered, it's only that bank that can see that bond. The other banks won't see anything because it's not in your personal name. Interestingly enough, we found SA Home Loans has, in 3 instances, registered it on a client's personal credit profile. It's not supposed to be there, so a little bit of fighting there, but personally, I'm not too fond of SA Home Loans in any case, because they don't have access facilities on their bonds, and the JIBAR interest rate can fluctuate quite a lot more than what you have with the repo rate. But yeah, so ABSA will, for example, have your first bond of $1 million and you qualify for $1 million. Now you can go to FNB, get $1 million. You can go to Standard Bank, get $1 million. If you go directly to Nedbank, they don't like originators. You can potentially get another $1 million. So the big thing to remember there is, to qualify for that $1 million, for example, that will be based on 30% of gross income. So if you get $1 million at each of those 4 banks, you're on 120% of your gross income as bond installments. That's very risky. If all of those units are vacant, there's no way. I mean, we need to eat. So there's no way that you're going to be able to cover those bonds. So it's very important to also put your safeguards in place in terms of making provision for interest rate hikes, making provision for maintenance, and making provision for vacancy.
But on the you're saying the bond is not visible to the other end. Is it the bond, or is it the surety that we have signed?
Well, both. Because remember, that bond is registered in that company's name. So the company has the bond. You have signed surety for it. So that's internal to that specific bank.
Okay, but you can still go to another bank and get another bond.
Yeah.
Okay, this is a nice tip. I think it's something that we need to take advantage of. Let's speak to Mulatelo, and I hope you show on your camera so that we can meet officially for the very first time today.
I don't think I could today. Okay, I could try. I'm actually not in the best state. I slept rather very late. So when I got the link, I'm like, hey, so let me try. So this is the face behind the brain, guys.
The first for me as well. We've spoken so many times.
So many times as well.
I know, guys, you know, I've actually improved on keeping my relations, but guys, I am happy to finally show my face. So Christian, I'm just gonna add a nugget to the conversation you just had with Ndumiso, right? I think I'm not sure, probably he knows about it, but I'm just gonna say it, right? I think probably one of the reasons why the banks might not be completely be able to trace the bond on your name, what I normally do is if I have some healthy capital, I would literally loan out a sizable amount onto the business, can call it the business systems, right? It's gonna have its own cuts. Like I try to separate my personal life away from my property investments, right? So if I know, for instance, because what I try to do is that I would keep 6 months of an emergency, for instance, right? If it's going to be a rental strategy, I would keep it in that account for that particular property, or not particular property, for that particular bond, depending on how many houses are on that company. Let me put it that way, right?
Yeah.
So I would keep 6 months. In a way, then if I like cash flow properties, obviously I'm in that industry. So I don't take in the money. If my tenants are paying me, they pay directly to that account. In that way, it's also easier for me to manage it. I hope I make sense. But anyway, so Christian, so interesting enough is I've been trying to, I've got 3 profiles in the property sector, right? I just recently started sharing information of home buyers because I feel like everybody's so focused on property investors. I'm like, hey, we're leaving people out and the experiences are horrid, right? So I have a profile whereby I speak to home buyers. And interesting enough is that I've been trying to liaise with a lot of bond originators, right? People in your field, and I'm seeing that I'm finding that most home buyers are not like us, right? They don't negotiate their home loan interest rate so often. So I went out, I was like, guys, why don't you offer this service more often? Is there a clause as bond originators? I'm going to put this out to you. Is there a clause as bond originators whereby once you've signed off a deal with the bank and said that the client is happy with what we're offering, you can't negotiate it on their behalf? Because I've learned that it takes a lot of confidence for you to every January go and like Standard Bank, listen, I'm a diggity bomb client, give me better interest because I understand my money. I understand my impact. Then the second one is the hat that I also do. I love capital flips because I don't like maintaining and I don't like confrontation. That's my character. So I really try and stay away from rentals because there's maintenance in it and obviously the systems, but sometimes systems need you to actually intervene as well. I think I once was in one of the spaces because I obviously I'm on those platforms as well. And one of the guests, they said they once sold their portfolio, which was 28 or 29 properties. And they realized that as much as we're trying to build wealth, keeping properties is not perhaps the best investment strategy within the real estate industry, right? Because there's a lot of strategies. You don't always have to own them to make money, right? I think, what's your comment on that? Are you for ownership? Your personal comment, because obviously it depends on strategy. Yeah, so guys, thank you so much. I think the shyness in me is gonna put off the camera now.
Thanks, Monotelo. Yeah, so first question about the originators. Our service stops once that bond has been instructed. From that point onwards, we unfortunately have no point of intervention, and our relationship and our contract with the banks gets to that point of saying, right, we've submitted this deal to you, and now it's yours. You take the ball, you instruct the attorneys, you register, you do your collections, you do you. So on renegotiation of that interest rate, you will have to do that directly with the bank because I'm not a party to that transaction anymore. I was only the facilitator in getting that transaction over the line. So it's exactly the same principle as with an estate agent, where they're involved in brokering the transaction. And then down the line, obviously dependent on your own strategies, if you maintain relationships with your prior buyers, you can resell that property when they sell but for the rest of that, there's no point of in phoning your estate agent through whom you bought the property 2 years down the line to say, listen, I've got a leaky roof. They don't care, quite frankly, because they already made their money, but also they don't really have a point of intervention. So you need to also just look at where exactly in that proverbial food chain you find yourself. And same thing with bonds. Our, I can almost say, code of ethics in terms of the approach of our contract with the banks also comes down to that we will only negotiate interest rates and play the banks off against each other on the first purchase. We won't do switch transactions. So I'm not going to be able to help you to switch your bond from ABSA to FNB or wherever. And the banks will in any case also not, as a rule to protect themselves. So they will not pay any commission on a switch transaction. So that is also going to be on you to do. If you want to investigate something like that, you're welcome to reach out to me. I do know quite a lot of banking consultants at the different banks that in their internal channels can assist you with that. But as I said, I'm not really fond of switching home loans because quite frankly, the juice is not worth the squeeze. So just try and push that rate down. If they maintain that they're not going to, wait another year and then just keep on bothering them again and again and again. And I just lost my train of thought. What was your second question?
I think the second one, in short, is do you think that owning properties, the physical owning of it is a good strategy? Because remember, it's a value chain, right? There are points whereby you can make money with actually not owning the properties. So where do you stand on that? So
personally, I'm a bit of a hoarder. I like having properties, saying, drive past the complex, it's mine, I've got that, it's mine. But yeah, that's just my own idiosyncrasies. I know quite a couple of guys who have massive rent-to-rent strategies. My one friend that cycled down to Cape Town with me as well, he owns one property, but he's got 8 rent-to-rent properties where it's literally just a matter of arbitrage. So he rents for a certain amount, Airbnbs it out, and that then gives him a little bit of an upside. And then remember, the big upside to that also is if things go completely wrong, you only have to cancel a lease agreement. You don't have to struggle with selling it or anything on that line. But you've got your other side to it as well. I mean, you don't have access to the capital growth. There's no real capital growth right now, obviously, but it will come again. So for me, it's about the long term, creating a proper, tangible asset. Your support structure in terms of your services around it is ultimately what's going to make or break it. Like personally, I don't get involved in rentals. I'm way too much of a softie. And I leave that to the guys that enjoy conflict. And thankfully, I've not really had very bad experiences. It's been like 2 or 3. Personally, I believe all of us, and sorry if this is a horrible thing to hear, but all of us are destined to at least once have a nightmare tenant, because that's the only way that you're going to learn how to handle things differently in terms of how do you screen that tenant, how do you make sure that things get taken care of properly. And then there's a couple of interesting things that one can also do to safeguard further. A mate of mine's got a metering company that on the prepaid meters, I mean, we all know we're not allowed to cut electricity when they don't pay. A lot of us do it behind the scenes, but nobody's going to openly say we do it because obviously it's illegal, spoliation and whatnot. But what he built into his meters, and I love this, I'm gradually going to switch over to making use of him wherever I can. If that tenant's not paying, on the system, he can limit the amount of amps that can be drawn. So it literally pulls down to the guy's fridge and 2 light bulbs work. If you switch on the TV, the power trips. So I didn't cut your power, but I need to get money to send out an electrician. So sorry, man, I can't help you.
Thank you so much, guys. I appreciate you guys. I'll be on mute.
Thank you for having come through as well. Appreciate you having you here. Now, Christian, I see there is no hand, which is a good thing because we need to close. So
oh gosh, I just saw the time.
there's someone that just sent me a WhatsApp. I think he's on the call, but just try to place it on the chat. He says he is buying a property, but he wants to buy a property, but it's on credit bureau. I don't know. I think it means he's been
probably
listed.
Adverse listing.
Yes, yeah. What can you do? How can your company assist? How can you assist him?
So, I'm very happy to also chat with whomever you are. Let's get a conversation. Let's look at what the nature of the problem is. I've had a couple of very interesting interactions. Actually teared up a couple of days ago with a voice that came through where this couple was on the verge of losing their house. It was supposed to go on auction last week, Friday. And the one attorney that I deal with managed to stop the auction. He managed to salvage it, and he's busy reassessing all of the arrears and all the nonsense that's built up from the creditor's point of view to help them to get back on their feet. So that's a very big extreme. The other side of it is if it's just 1 or 2 bad payments or something, or you're far in arrears with a lot of obligations, I'm happy to have a look at it with you, just give you a little bit of guidance to say, okay, well, let's take them one by one, get all of your debt back up to date. If you've got a judgment, I can refer you to this exact lawyer, Eddie. He's wonderful at getting judgments rescinded. If you're in debt review status, I've got somebody that can also help to get you out of that. Because in the end, you need to work to getting yourself bond ready. And the only way to be bond ready, first and foremost, literally just comes down to having the right credit score, no adverse listings, and having the right affordability. So, I mean, life happens, and I've had a couple of cases. One of my clients a while ago, we got them a bond now, but up to March this year, they had horrible arrears. Their business just completely shut down due to COVID. So what are you going to do? Are you going to eat, or are you going to pay an account? Quite frankly, all of us will answer exactly the same way, and there's nothing wrong with that.